Thank you.
Now I will give floor to Laszlo, who will talk a bit more about digital due diligence. We are co-hosting this event with him. Sasha will tell you a bit later more about Mara, but I will just tell you that I'm marketing executive at Mara. Mara is SPV and feeder fund solution provider. Now you will hear more about digital due diligence from Laszlo.
Much appreciated. Do we need a mic, or am I speaking loud enough? Maybe it's a mic, right? All right. Hi, everyone. My name is Laszlo. I'm an investor and an entrepreneur in the digital sector, co-founder of Cognitive Creators. Let me start by sharing a quick story. An investor called me recently, Laszlo, we've acquired a business and we don't know what happened, but it's lost half of its revenue within a month. Finances looked solid, everything checked out before investment. So this is what happened. The company had multiple physical locations and an old but well-performing online store. And after acquiring the business, management decided that the first thing to do is to boost online sales. So they have implemented a completely new e-commerce system with a new link structure. Alongside with it, they threw out the old one as well. Good intentions, but poorly executed. Overnight, they have disappeared completely from all major search engines like Google, and also from the AI engines like ChatGPT, and suddenly their online revenue collapsed. You might think it's an edge case, but far from it actually. Yet many investors realize this the hard way. Once the deal is closed, instead of focusing on growth, firefighting starts as the skeletons fall out of the closet. So I think it's time to realize that doing due diligence the traditional way isn't enough anymore. Let me give you an example on it. We have a company headquartered 2 miles from here called Builder AI. In 2018, they have raised $10 million on the promise to build up the AI-driven platform that makes you build apps as easy as ordering a pizza. Remember, this is 2018, no ChatGPT, no Lovable. Over the next 4 years, by 2023, over the course of 4 rounds, they raised an additional $450 million and had been backed by companies like Microsoft, SoftBank, and the Qatar Investment Authority. Yet apparently, despite the 1.5 billion valuation, no one seemed to be conducting a proper due diligence on their technology. As if they had. Not even the first round of financing would have happened. Why? Well, earlier this year, investigation found out that their AI platform was actually 700 developers building software day and night for their clients. Needless to say, the company went bankrupt, reputations were damaged, and hundreds of millions drained. I would like to show you the other side of the coin. Let's take a look at the case where a private equity fund wanted to buy into an English League One football club. They conducted the due diligence, audited the organization, evaluated the infrastructure, the academy, the major revenue streams coming from match day, broadcasting and commercial were looking solid, legit, and showed potential. Yet they have decided to see the complete picture to audit the digital assets of the organization as well. Allow me to show 2 slices of this process that help them evaluate the hidden digital risks while also uncover the future revenue potential, all this before the investment. Let's see the first slice. Where you can see there are 450,000 people who can be reached digitally within the metropolitan district the club is located in. Now, on the other hand, worldwide, there are 360,000 searches every single month on the club's name. Most of it is coming from the UK, while 60,000 coming from the city itself. Now, what does this data tell us, among many other things too, for sure? By digging deeper into the domestic search trends, what they realized is Most of it's coming from supporters of the club living elsewhere in the UK who wanted to be closer to the action. Activating 1% of this buying intent by creating a dedicated membership for them for the price of a pint a month would lead to additional revenue of £190,000 per year. Even more interesting for me personally, if you take a look at the worldwide search trends, you would see that there are more than 100,000 people searching for the club's name from abroad. Digging deeper into this has revealed that there is a great untapped opportunity to engage with and monetize on this international audience. So what can be done is creating a dedicated subscription, for example, allowing these customers supporters from abroad to watch the games and exclusive content internationally. And by converting only 2% of his intent would lead to additional 200K revenue per year. And this is the organic part of it. If the fund decides to invest into paid advertising, to engage with larger part of these buying intents, the potential for revenue is in millions for every single year. The second slice of the process I want to show briefly is about due diligence on the technology infrastructure of the club. Among many other things, this is the way they discovered there was a major breach in the club's ticketing system that required a one-off remedy cost of £70,000 after they have invested to fix it. But also, on the other hand, they have the potential for annual cost savings of at least £60,000 by restructuring the cloud infrastructure and the licenses the club is currently using. Now, what we can see from the past is that the traditional aspects of due diligence, like financial, legal, or commercial, hasn't really changed much over the decades. But as you saw from the examples, incorporating the digital aspect into the framework, it's not optional anymore. As I like to say, it's like having that great young talent in your squad who you need to be putting in the starting lineup. It's not enough to be subbed in at the end of the game, because this is how it helps you understand and evaluate your hidden risks and the growth opportunities driven by digital. Mapping customer journeys, evaluating technology-related risks, demand modeling, or discovering intent signals like you saw are all played part of the game now. It might sound fancy, but it isn't alchemy at the end. There are valuable insights driven by audits conducted on any organization's digital marketing, brand, and technology. Valuable insights that are also translated into money, the common language all of us investors and entrepreneurs understand. So be it sports, banking, or real estate, the digital dimension can be applied into every industry and should be part of your due diligence process. As without it, you're really flying blind, and the questions will always be there. How big will the skeletons in the closet be, and how much money are you leaving on the table? And digital due diligence has the answers for it, so that you can invest with peace of mind. Thank you very much for your attention. We have a great panel discussion coming up. I will hand it over to Sasha. In the meantime, happy to continue the conversation digitally, physically, whichever you prefer better, and continue it after the panel to share more of the industry insights that we are seeing. Thanks again.
Thanks very much, Laszlo. So I think as you saw there, these are the guys which are going to help each of you on your due diligence and deals. So do reach out to cognitive creators. A bit about Mara. So we're essentially an SPV administrator. Sports is probably about 10% of what we do, but essentially we help emerging managers, investment groups get off the ground. Setting up fund structures is just really expensive. The bureaucracy, filing funds with regulators just takes months. But essentially with our special purpose vehicles, we can help groups get to the market in a matter of days, really, if not hours, as the groups which on the panel today can attest to. So we love what you do, and we love to support you. So please, welcome the panel. We've got Ruari Jess, Attila, if you want to stand up as well. Samir, here you are. Thanks so much, everyone. So we're going to deep dive into the world of sports. I think everyone knows sports. It has a lot of emotional attachment with everyone, and there's a lot of sports as well. You'll be reading a lot in the press about new investments, new private equity groups like Apollo, setting up new business lines. Many of you in the room today are advisors, actually advising on the structures and the investments, a lot of M&A activity. We're working with each of you in various capacities. All of you are doing amazing work. I'll just pass over to each of you to introduce yourself first, and then we'll dig a bit deeper into what everyone's doing. Attila, would you like to go first?
Sure. Hi, I'm Attila. I used to be a professional cyclist. Today I'm a digital expert. My field is digital strategy, so whatever Laszlo just presented, I'm leading the brains behind our team to make sure that we find those risks and we identify those opportunities for you guys to make the most out of your money.
It's actually not market. Oh, no. Come on. That's true.
Hello. Hello, everyone. First of all, thank you very much for having me, Mara team. Great to see everyone here tonight. Try and keep it pretty snappy and exciting. My name is Ruari Bell. I'm the managing partner of the Players Fund, which is the UK's first athlete-led venture capital firm. What that means is a lot of our LPs are professional athletes from rugby, football, cricket, NFL, tennis, ultramarathon runners. It covers all sorts of sports, different genders, different geographies as our LPs within our early stage fund. So we invest into pre-seed to Series A early stage tech deals. We're fairly generalist. We tend to invest into the UK and Europe, but also into America. We invest ticket sizes of about 150,000 up to 300,000 pounds into those kinds of deals. I think B2B SaaS, AI, marketplaces, some media plays, fintech, health tech, different plays like that. That's our main product in the business. We also have later stage sports asset plays, so private equity investments, which we do with Mara. We are quite selective into about 2 to 3 different sports assets or sports adjacent businesses. Think Tomorrow Sports is one of our portfolio companies with Rory McIlroy, Tiger Woods, PGA Tour, a new format around golf and technology combining together to create a faster and better experience for fans. Another portfolio company is Whoop in our later stage strategy as well. Another opportunity that we're currently closing is into a Formula One team. So it varies quite a lot. That's the second product in the firm. And the third product is creating corporate ventures for rights holders and football clubs. So we recently just launched something called Como Ventures with Como 1907 around helping them invest and incubate in the best businesses within the Como area, but also within Italy. It can be around merchandising, it can be around logistics, it can be around travel, it can be around food and beverage. If you think about a football club as a multi-billion-dollar business, it has all sorts of different opportunities and verticals that they can invest into, generate revenue through. So that's our job as well. I'll just pass on.
Thank you. Good evening, everyone. Good to see some of the familiar faces. Thank you, Sasha and Alessandra and Laszlo, for the evening tonight and the event. Similar to Laszlo's, I'm a former elite athlete. I played handball many moons ago back home. Lots of my teammates went to Croatia, won the Olympic gold and the World Championships. I actually set up a handball club here and won the England National Championships and was drafted to play for the Team GB at the Olympics. Passed on that, went into a sort of football world as a former chairman of the football club and also a father of the 3 super sporty kids, all on England player pathway to play hockey for the country, and the boys are still trying to get signed to the Premier League club. So sport is actually more than just a business for me. I run a 7th generation family office. The focus over the last 200 years has been on commodities and real estate. I'm actually now bringing some of the alternative asset classes. So privately have invested in sports tech, fintech, AI, medtech, and climate tech, and all the businesses I invest in have a sports vertical, because I think sport as a social impact-driven asset has got so much more to offer, whether you're an investor, whether a consumer, the ecosystem is very different. So I also am currently building a new sports franchise in the US. The idea is to launch it after the LA Olympics. We're taking some of the Champions League clubs to Vegas next year. The year after, we're taking Barcelona, PSG, and some of the other big brands. And just after the LA Olympics, we're going to launch 2 leagues, men's and women's. And the idea is to actually do a equal pay, following in the footsteps of tennis and squash, to ensure that the new sports that are emerging out are not discriminating when it comes down to the pay towards women. Because we've seen what's happening in the kind of women's sport and the trajectory it's going. Last but not least, football as the big. So I played football and handball until 14 professionally. So I decided to go down the handball route, but football has always stayed with me. So I've just set up a sports ventures outfit with money from the Middle East to acquire football clubs in England, Europe, and back to the Middle East ahead of the Saudi 2034 World Cup. And the main difference between us and what's out there is going to be the element of community, social impact, digital transformation, and ESG that will bring everything together. So rather than just focusing on the business of sport, this is where I'm hoping, working closely with Sasha and Mara, we'll differentiate ourselves. We want to create a long-term impact. So the lifetime of the projects is 12 to 15 years. Most of the acquisitions happen and sort of sales of those assets happen a lot quicker than that. So we really want to make a sort of a new way of owning a football club. Many of you will know that owning a football club has been a bit of a trophy asset for generations now and for decades. And I think it's more to it, and we'll discuss that in greater detail.
Great, thank you. Good evening, I'm Gessica Howarth, VP at Sphera Partners. We launched Sphera last summer, and our focus is on the thematic of accelerating women's sports. And that translates to investing in rights holders across teams, leagues, and federations, as well as ancillary assets that could be anything from operators to agencies to sports tech and beyond. We invest globally and invest in both mixed and women's sports, so not solely female, but that has to be that level of equality, or at least an aspiration to get to equality where we invest. Our background is as mid-market private equity investors, and the real thesis behind Sphera is applying that toolkit and skill set of hands-on operational involvement with portfolio companies, both pre and post-deal, to the world of women's sports, because we think it's right for the stage and the level that those sports are at, which is quite different to male or more broadly mixed global sports. And it really requires that hands-on involvement from an early stage. We have made one investment so far. So our first investment was in the US Women's Basketball League called Upshot. It's a development league that sits below the WNBA. And we're spending quite a lot of time right now on football, so European football in particular, soccer from the US. And think that's really exciting because it is a under-resourced, undervalued asset in a lot of cases, and there's a lot of value to be extracted from it. But again, it requires a lot of input and work to be done to extract that value. And then beyond that, we've been looking at a couple of other sports, but one we're looking at right now and raising for as well is a travel opportunity, which gets quite a lot of people excited.
Thanks very much, guys. So I want to set the scene a little bit in terms of talking about the opportunities. So I love working on your deals because of sports, we all love sports, etc. But in terms of the commercial side, Samir, we were talking a few weeks ago about the distribution networks which these clubs and other affiliated sports agencies have, just the fan networks. Could you talk a little bit about how fans can capture the commercial upside from really looking at these, these fan bases?
So, I've been a big sort of advocate of fans first and athletes first approach. However you look at the opportunities inside the sports industry, when I was chairman of the football club, the club turned 100 at the time, and I ended up talking about the next century and the fact that wherever you're sitting in that sort of hierarchy in the pyramid of ownership structure, you're there for a short period of time. I often joke about the fact with some of the art collectors or diamond collectors, the fact that they're just custodians of those precious items. The same goes for owning a football club and being involved with a football club. You will only ever be custodian because, as we know, football clubs and sporting properties have been around for 100, 150 years, and they'll be around for the next 100, 150 years. So there is a bit of a disconnect when it comes down to the way in which fans perceive the sort of investors, and the investors perceive the fans. And that disconnect needs to be sort of addressed in the sense that, fans as the consumers of the content, but also consumers of the merchandise, consumers of everything that's out there to do with that club, have got so much value to add. And if you treat them in the right way, you actually increase the value proposition and the valuation of the club. And Laszlo talked about the importance of digital, and I think the two things that are not sitting on the balance sheet today of the football clubs is the data piece and the intangible asset piece. And I think we'll see a huge change in the coming years when that becomes more relevant. I do a lot of work in the embedded finance, the fintech side of the sports industry. I work closely with the guys that are behind MBNA deal with the Premier League, by the guys behind Head of Sports and Amex, work closely with Visa and MasterCard, as we all know, are massive sort of sponsors of the sporting events around the world. And we often talk about these kind of collaboration days about the importance of fans, but also what it is that we need to do more of. How do we give them the opportunity to engage in the right and meaningful way? How do we use the power of AI to create a relationship in one-to-one rather than one-to-many? I mean, there are so many innovative solutions out there that are very siloed. I think the problem we have in sports industry, and I think I'm hoping with the influx of the American investment and guys from the finance background, they understand the power of data perhaps more than your traditional European club owner. I think if you look at the last 20 years, or if you look at 80s and 90s, those owning football clubs, were local businessmen that were supporting the local clubs, and they didn't really care that much whether they made money or not, because we all know that football or sport in general is very, very difficult to make money on. I think that the exception is the US, but not everyone in the US is making money. So I'd like to think that fans are becoming a lot more savvy when it comes down to their expectations. I think the new generation of club owners and investment is also starting to realize the power that fans have, and then the sort of granular data around each fan and know your fan approach will also help the entire ecosystem to communicate better. I think once you create that ecosystem that's got very good communication tools between them, we'll be onto something even more exciting and more valuable.
And Jess, can you talk a little bit about the macro landscape in terms of viewership, and then also how women's sports fits into that? Because I think the macro trends are probably a bit more pronounced with women's sports in particular.
Yeah, I think viewership is an interesting one because there's a lot of different ways to look at the reason that we look at viewership a lot of the times is to assess the scale of our sport, and viewership comes into a volume conversation, whereas actually I think the right metric to look at, especially as it relates to women, is beyond viewership and volumes, and it's more about fan engagement and driving you towards that lifetime value with the fan. We see it across a lot of different sports, especially with the younger generation, but with women's in particular. You see far higher fan engagement. So the WNBA versus the NBA last year with 16 times the TikTok engagement for women's versus men's. And so thinking about these different metrics and how we assess that is really important. Clearly, viewership in most women's sports right now is below that of men's. In football, we're 50 years behind because of the ban on women's football in a lot of regions. So you can't really compare them in that sense. But what we are seeing is rising viewership, left, right, and centre. You've seen all the stats around the Rugby World Cup, around the Euros, and everything is trending in the right direction. But thinking about the reasons that we look at viewership, so it's sponsorship value, it's the value that media rights are going to associate, and so actually getting to those ROI stats and thinking more carefully about the way we analyse those is really important. And so it's, again, alongside the engagement is what is the viewership across different regions. The WSL, the English Women's League, this last year had 70% of its viewership outside of the UK. Arguably, I'd say that is a far more valuable property and stat than just having slightly higher viewership, but it all being UK-based. So I think you have to be quite careful about which metrics we look at and how we do it. The other quite interesting thing that we're seeing around viewership and attendance and all these other metrics as well across Europe in particular is at the league level, there's really an effort to drive this. And so, for example, in Spain and France, there's a portion of media rights or a portion of distributions to clubs are actually being held back for clubs who are promoting different initiatives such as sustainability initiatives, driving their attendance and driving different ways to grow the sport both in that country and beyond. And interestingly, that's not available to the top 2 or 3 clubs because they already get the attendance numbers. And so there's a lot of work being done to drive viewership, to drive fan base, and to just bring the sport up more generally at the league level, at the team level, and it's producing some quite impressive numbers to date.
Got it. Back to Ruari now. I mean, there's a bit more an interesting trend which I see with your deals. It's about harnessing athletes to actually bring their own distribution networks to add value to other companies. It could be consumer or companies, adjacent to sports. Can you talk a little bit about that?
Yeah, absolutely. So our thesis and strategy around the Players Fund in the early stage investments is that we can bring a certain level of credibility and value add to our investments that some of the firms can't, right? And the way we look at it is, what is the company? What kind of vertical is it in? And how, during those early nascent stages, let's say pre-seed to Series A, can we bring value? The biggest things we see is through the network. So through the network of athletes, we also have entertainers, artists, we also have the founder of SoFi, the founder of Skyscanner, OpenAI directors. It's a wide mix of different LPs that we like to work with and collaborate with on the kind of businesses that we invest into. So the main things in VC investing and private equity investing is finding the right kind of deal. Is it a good deal? Does it make sense? Is it the right valuation for the founders, the right kind of founders to create this business and take it from A to B? Can we get into that deal? So that's where the athletes and the brand that we've built really comes into play. Winning the most competitive allocations into these deals is very important. So we show the value that we can bring to the table by introducing that founder to the head of a supermarket and an insurance company, the head of another business where they can develop multi-million-pound B2B connections and contracts. That's really how we like to play the game at the Players Fund in terms of getting the right kind of access, proving tangible value add, so that the athletes aren't just sitting on the sidelines, but it's also very important that they get involved in the right ways, and we're educating them about how to think about the value creation that they can bring to that kind of business. And then really about driving that tangible growth, increasing the revenue of the business, getting them from pre-seed to Series A to Series B, and then also bringing in follow-on capital. So a lot of our investments are co-investments with Tier 1 VCs, A16Z, Sequoia, Seedcamp, Local Globe. It's really important that we come in with a smaller ticket, but bring a lot of value, and that's what the founders look for. And it's really about getting the athletes involved in that kind of process so that they can learn and become better athlete investors. So that actually, the reason why we started it is because we wanted to help athletes to be better equipped for life after sport or during sport, so that they are getting involved in investing, understanding the way in which business can work, so they don't just leave sport thinking, okay, what the hell do I do next? But they've actually got an idea, and they can speak to us, they can speak to other GPs, the ex-CFO of Amazon and Deliveroo, the ex-head of investments at Founders Factory, our team, about what they should be doing, how they should be doing it, and be supported by the right kind of individuals.
Got it, thanks. Let's talk about the evolution of the capital base now. I mean, when I was younger, it was basically a lot of billionaires buying football clubs, sports assets, but it's evolved a lot more now, and the investor base is a lot more diverse. So can each of you talk a little bit about the deals you work on, where the money's coming from, basically? I'll start with Attila first, actually.
Sure. Well, it's completely changed, right? So And I think SPVs are one of the catalyzer of that change because, as you said, it used to be just billionaires, but now also small ticket investors can get into the game. What we see also from our side, there's interest from people who had never touched sports before. So they just want to diversify. We live in an economic situation where everything changes so fast. As some of you said, sports was there for 100 years and likely will be there for another 100. And if you take that landscape, and specifically for family offices, it's actually a no-brainer to be in sports because it's a generational opportunity to get in, to be there on the long term. And for them, it's of course for longevity. So they want to stay in the game, not just to exit quite soon, but to be there. And there's the emotional factor we were just discussing before the event. So in that sense, I think we are dealing with a completely new wave of investors coming from all different angles. And I think Players Fund is amazing, like bringing the sports people into investing. So I think you're doing a really interesting job here.
So that's high net worth investors, individuals. It sounds like you're seeing a lot more of.
Yes, of course.
Cool. Jess, maybe you want to go next?
Yeah, it's actually a really interesting one for us because we're in the pre-fund stage, so we're currently raising for the fund, but doing things on a deal-by-deal basis as we're raising and proving out that track record. And so each deal that we're doing has a slightly different investor base, which is slightly different to some of the investors that we're talking to for the fund. So for our basketball deal, that was a slightly smaller check and with largely high net worths. And from Europe, from the US, and a big range. And it's interesting the evolution in investor appetite and risk appetite. Some of the investors that we got there have made their money in crypto, and so actually have that more open mindset and more open to different risks that they might have not appreciated before, versus some more traditional high net worths that we might have gone to from our previous funds when we're looking to that family and friends side. For our football deal, what we're doing is we're raising a multi-club vehicle, and so that's a slightly larger amount, so between 30 and 45 million. And that has a mixture of some high net worths and some more family office slight institutions. Because football clubs, in the majority of cases, are loss-making, it's more difficult to get traditional institutions on board. And so there, it's much more a case of family offices who have some connection to a family member that is female playing sport, and it can be as simple as that, for them to really understand the drive behind it, and again have that still that level of risk appetite that is okay with loss-making businesses. And there we're looking a lot more at the US, because sport in the US in general is a more mature commercial model. A lot more of the businesses there are more profitable. And there isn't that connotation that you see with football clubs being the way that you make a billionaire a millionaire. And it's just, I think on the women's side as well, we see a lot more growth in women's football out there. And they're probably, say, 5 years ahead of women's football in the UK and Europe more generally. So our investor base there is a mixture of high net worths and family offices from our region. Then when we're looking at the fund, that's a much broader mixture, but it's your more traditional family offices, as well as some institutions that we might have gone to in our previous lives in mid-market private equity, but where we've got that relationship. And it's a bit more of a journey that you have to take people on. So actually the ones that come into our first close will probably be a bit more similar to the people that we're talking to about the football vehicle, i.e. US-based and family office. Whereas for the latter stage here, our second, for the final close, that will be a broader mixture of European funds that are both more institutional investors like pension funds, as well as the family offices as well.
Samir, do you want to go next? I know you've got some interesting Middle East investors, which...
Well, I think before I move on to Middle East, I think couple of interesting things to add to what both Rory and Jess said, that we're seeing the emergence of new entrants into the sort of sports investment market. I think we're seeing the first generation family offices. I actually get approached at least once or twice a month by the guys from Silicon Valley that have exited their companies in billions, and they really want to set up a fund, they want to buy a football club, and they want to really get deeper into the world of sport. And then you have multinationals, and I worked very closely with the Deutsche Telekom Group and now with T-Mobile US, and they have started very actively looking at acquiring sporting properties, having sponsored them for a long time. And I think the Deutsche Telekom, together with Mercedes and Rewe, also bought into the e-sport team, SK Gaming, some years ago, and they also set up an e-sport league in the Adriatic. And they're now looking to invest in the basketball and football space as well. So this is probably the first time that we see, and I was on a call to Mitsubishi quite recently, they're looking to do the same, not just to sponsor, but to start investing. So I think it's the first time we're starting to see major companies doing more than just sponsoring, especially the consumer-facing ones. They understand the power of data. And I spent a long time in Germany, first convincing the world's largest telco and then working closely with them on the way in which you connect the dots with their 5G connectivity and broadcasting to actually make some commercial sense on the ROI. And then the third sort of interesting anomaly that's emerged in the last few years has been the fan-owned clubs, or the sort of fractional ownership of the certain clubs or percentage of the clubs that the fans have bought into. Now, we've had some bad cases with the likes of Socios and Chili's on the fan token side, which during this sort of collapse of, I would say, tokens and NFTs a few years ago has left a bit of a trauma on the sports industry. And I think we're trying to rebuild the trust, because actually what's an NFT? It's a digital collectible, or it's a collectible per se. And I think, as an art collector, I didn't always buy an original piece of art. I also bought limited edition prints if I couldn't afford something that would cost huge amounts of money. I would actually go down for the next best thing. And that's exactly what these digital collectibles were supposed to be, but we didn't really translate that really well. So but that's going to come back, and it's going to come back because Web3, as a based on blockchain technology, is got a very, very strong foundation of trust, transparency, and traceability. And I think if we, going back to the original question that, Sasha, you asked about the importance of fans are part of the creators' economy. And the creators' economy, and with Web3, is here to also help athletes, former and current, to monetize the relationship with the fans that more directly than outsource that to the third-party providers where everyone else is making money. And now, people say, well, why should they monetize? Well, if they don't want to pick up these fat checks, they can donate it, they can build schools, they can do charitable work, and that's what sportsmen and women around the world actually do. They often go back to where they come from, and in lots of cases, at least as far as football is concerned, they come from underprivileged, not the privileged, and they go back and build the communities and rebuild the communities, and they are deemed as role models as well. So these are very much, in my view, new emergencies. The Middle East is interesting because it's fast-paced. I think that culturally, some of my mentors that have worked in the Middle East over the last few decades said that it took forever for the Middle Eastern investors or families to move, often 5 years of smoking shisha and going for dinner before they would write you a decent check. Well, 100 million or 1 billion doesn't matter. Things are moving much quicker now, especially in sports space, because they got it right. I think they learned from the Chinese mistake. The Chinese 25 years ago threw huge amounts of money into football in particular, and they failed. And I think the last Chinese billionaire that owns the football club is the one that from Folsom Group that owns Wolverhampton Wanderers. And I think he will probably soon sell it. So the Middle Eastern investors have, I think, got that right. Hence, there is a huge movement between the Middle East, the US, and Europe, including the UK. And I'm very excited about that bridge that's being built and the fact that we in Britain have also got the privilege of the cultural relationships and the strong bonds between the Middle East and the UK for various reasons for a long time. I don't know about the Americans, but it's a different story.
How about you, Rory? Where's the money coming from?
Let me find the checkbook.
It's a good question. Yeah. In our perspective, it comes from family offices, high net worths, athletes, artists, entertainers, as I said, exited tech CEOs. The reason we are able to bring in such a diverse collection of different LPs, and here's a little plug, it's thanks to people like Mara, right? It started with people like AngelList and Sidecar and Odin and Mara being able to help pull in different geographies of investors into certain investment vehicles with such ease. So thank you very much for that. And it's now such a global world where we can get in touch with anyone at the click of a button, right? Which makes everything so much easier. Platforms like Mara have been able to democratize this kind of access to these kind of opportunities, which before was extremely difficult. I was speaking to some investors the other day that were having to take flights to San Francisco to sign SPV documents only 15 years ago, right? And now look at us today. We can pretty much close deals in the space of 5 days because of digitized platforms that can make it so easy with the right kind of trust and support from people like yourself to jump through the nice FCA hoops and hurdles that we need to go through, which is important. But the digitization of this process makes it so much easier for us. So regardless of where the capital comes from, which is all over the world for all of us, it can be done very easily.
Well, I appreciate the plug. That wasn't scripted. So before we move on, we're going to talk about deal structures, but I want to open it up to the audience, see if you had 2 questions from 2 people. Yeah.
So, Gemma, you spoke about you spoke about looking at women's football teams in America. How do you feel about lots of clubs in Europe trying to be polite, but get rid of their women's football club to help with PSR? Do you feel that with funds like yourself, which is doing such a great job focusing on women's sport, if you're focusing your energy on America, does it mean that these poor women's clubs or parts of men's clubs are going to end up being just sold at really low valuations just because the clubs are desperate for the cash to meet their PSR so they can go and buy a player now because their fans are putting the pressure on them to do so?
No, it's a really good point. And so we originally started looking at US football last year, and now our focus is actually European football. There's been, I think, a gradual appreciation of the potential value of European clubs, and we have seen this trend with PSR, and I think it started out with a lot of the clubs saying you see the growth in the value of the women's side, and then some of the men's have suddenly changed tact at the end and done exactly what you said. Actually, we see the true value lying in European women's football rather than the US. I think the US has done a great job in growing women's football, but I think valuations are somewhat on a forward basis right now. And it's going to take a bit longer for people to get the money back if they want to drive private equity style returns from US investments when you've got the likes of Angel City at 250 million. In Europe, valuations aren't there. They are catching up, and we've already seen a big transition over the last year in valuation expectations from clubs. If you think about Alexis coming in for Chelsea, question of the PSR element of that and who decided which came first, the desire to sell versus the investment. But you are seeing other clubs following suit, and we started talking to some of the clubs that you'd have heard the names of this time last year, and the valuations that they had in mind then are drastically different to the ones now. But that is a sign of the recognition of the value of women's football. I think the difference between here and the US is there's that element that they're tied up with the men's, so it's much more like they're corporate orphans essentially. There's massive value, but there's going to be a big body of work to be done to extract that value because you have to separate them out, you have to allocate specific resource, whereas right now there is none. And it requires a specific toolkit, which is exactly where we come from in terms of our backgrounds at Sphera. One of the funds that I was at before was a special sits investor, and I was doing exactly the same thing there in terms of going in pre-deal, trying to help them build out a specific P&L for a specific division of that business that would then be separated, and you would drive value in the future and allocate a different team and work with that team rather than just being your US model of it already being set up for you there. And I think more and more investors are coming in. You've seen the announcements with Mercury, with Crux, all doing similar, and picking specific assets. But it's about seeing which clubs the value is at. It's about alignment with the men's side. So one thing that we're really focused on, which is quite different to some of the other operators, is having the men's team retain a stake, an ownership stake, because it means you're aligned, and it goes on to the structure conversation. If they're completely selling out, you're still going to have a shared services agreement in most cases with the men's side, because these women's teams are using the same stadia, are using the same facilities as the men's, and will be for the foreseeable future, unless you do something like Michelle Kangas and you build everything from scratch, which is a massive investment, and that's a completely different investment proposition. That's a much longer return horizon. What we want to do is build these in sustainable ways, so we're not injecting massive cost and then we fall down all the same traps as the men's sport has done. And so doing it more carefully, and so retaining that alignment with the men's side is really important to us. And we've said, well, we've walked away from conversations where that's not the case, and the conversations that we're having are with men's teams who see the value of the women's sport, who believe in the growth of it, but recognise they don't have the skill set or the bandwidth to drive that growth themselves. But I think it's a really exciting time, and a lot more of the industry is coming onto that as well.
Can you think that for you? One question. One more question, anyone?
Hi. You very briefly mentioned investment horizons. I just wondered, I'm not from a sporting background, I work with non-sporting businesses normally, but I just wondered what the kind of time period from entry to exit of an investor is in this sporting environment, and if it differs from the usual business world.
I'll quickly go first. It differs a lot. So for us, we're looking at a traditional private equity buyout model. So it's a 5 to 7 year time horizon. There is an appreciation that we're going to go in there, do all the hard work in the first few years, and then it's right at that point that it's going nicely, and then we sell out. So we have optionality there, whether it's for the next fund, we sell it into the next fund, whether it's a continuation vehicle. So there is that option there. But we are quite different to your more long-term family office or evergreen model, who are more, if you want to call it, patient capital. And that's where I think you'll see some of the big checks being written, and more of the infrastructure investments going alongside it, whether it's building a new women's stadium, facilities, etc.
Just to add to that, I think my view is that if you're investing in sport, and you want a majority stake, you've got to embrace yourself for a good 7 to 10 years before you look at serious exit value, number one. Number two, the performance on the pitch and what happens to the team and how well they perform has a direct impact on the valuation at any point in time. So we've seen the cases of the clubs being relegated, we've seen the cases of the clubs not performing really well, not playing the European football for a period of time, and that all has a direct impact. However, coming back to the earlier sort of points that I raised, if the clubs organize themselves a little bit better, where, you know, I was at the West Ham Stadium at the Sports Pro AI last week, and I was next to the Cameron City Football Group, who tried to argue the point that data didn't really matter, and there's no real intangible assets around football, and whether they spend 5 million more or less in that transfer window is what determines how successful Man City or City Football Group. So also football and sport in general is run by still a decent or high percentage of a traditional football and sports mind. So I think we need to see a shift in that sort of human capital. I think that's still lacking. Looking at some of the fintechs entering the space and not seeing many CTOs at the Premier League that are, ex-tech guys, but they're very much inheriting the space or not really familiar with how to leverage their whole ecosystem is an issue. But that's fast changing, and in my view, it's very, very different to investing in traditional business.
Our take scene exits. It depends if it's an emerging sport asset or more of a traditional sport asset and what that could look like. So from a baller league to tomorrow sports to a Hexagon Cup, emerging sports opportunities that are trying to create shorter formats of traditional sports in different ways with athlete celebrity backing and also maybe backing from the governing body as opposed to a Manchester United. So it really depends on what you're investing into and at what stage. Usual benchmarks around 5 to 7. I've seen some people starting off in some IPL teams and getting out within 5 years. What's the good thing for us is that the secondary market in sports assets is pretty active. In the US especially, but also starting to grow in Europe. And also with the interest of American investors coming here, largely on the back of seeing a program called Wrexham on Disney, if anyone's seen that, thinking that they're Ryan Reynolds and Rob McElhenney. So there's a lot of interest coming over here to exit certain situations. I'd say 5 to 7, but it could easily go 7 to 10 in some situations.
And while we're talking about football, we shouldn't forget there are many sports.
Yeah.
And just to take one, UAE invested in cycling quite recently, and the results are visible. Not sure how much of you watch the Tour de France, but UAE is dominating not only the Tour de France, but also other competitions. And if you look at that angle, like you pick up cycling, which used to be a boring sport, and a massive investment comes, like for example in this case of UAE, that lead time is way shorter compared to where we look at what's called in traditional sports, football, basketball, where of course there's a lot more in terms of fan-based engagement opportunities, but these sports already have sponsors, so really depends on the sports category we're talking about. And just to add to Samir's, because I also talked with similar investors and neglecting the importance of data, I like to tell the story of when my grandmother first got a smartphone. By my roots, I'm Hungarian, and my grandmother lived in a really rural space, like really low tech. And when she got her first smartphone, she thought it was witchcraft. So, and today, she uses her smartphone, takes photos, uses iCloud to send photos, to show it when I'm in London, what happens in the little village. And now it's natural. Data, 10 years from now, will become natural. And I think there's a window, and if investors or smart at this windows want to jump in, because this is the right moment. 10 years, let's say it's 2035, data will be like a natural thing. Yeah, we use data for our investments. And now that window is here, and investors who want to jump in, of course, selecting the right sports and using that data can make these lead times shorter. But I have to agree, sports is a long-term investment.
Just on that important point that Attila made, I would, if I were a first-time investor, I wouldn't look into football at all. I was recently at the London Classics squash tournament in the Alexandra Palace, and I hadn't realised, but the guys that own Chelsea, Lakers, Dodgers, and F1 have now invested, Mark and Todd have invested also in squash. Squash is finally made into the Olympics. Having lost the breakdance in Paris and judo the time before. So finally you got squash. And frankly, straight after that tournament, they went to Egypt and they had the glass squash court in front of the pyramids. So to the point of broadcasting, why cycling and other sports are important is if you figure out how to broadcast, and I think with streaming, with all sorts of digital platforms out there, and the digital natives in Gen Z and Gen Alpha, I think we're going to see a totally different opportunity landscape out there. And I think that's going to come down to the way in which our kids and younger generations are actually consuming the content. And that's the exciting part about sport. I think, the fandom, the sort of e-sport versus traditional sport, what we can learn from one another, which is why the smartest investors invest both in esports and traditional sports, because there is a learning curve between the two. This is why the major sporting properties didn't pick the esport teams from their sports, but they went into your Leagues of Legends and Counter-Strike and everything else, because that world of £3.3 billion versus £5 billion of traditional sports is your entire planet. So you get that formula right, and you understand that sport is what the biggest entertainment asset there is and will always be one way or another, then you really come onto something.
So on the topic of beyond football, that's what we have down here, but if each of you were to pick one sport outside of football which has the most interesting prospects, which would you pick?
I'm going to be biased here. Well, cycling is popular now, but one part of cycling is just getting attention, which is mountain biking. I used to be a professional mountain biker, which was really, as Samir said, had no broadcasting. Now with drones, especially with these nimble drones, they can actually follow mountain bikers, and it's quite fun. My 4-year-old son watches the international competitions with me on YouTube. And like he has a choice whether he wants to watch the competition or choose to watch cartoons in the afternoon. And guess what he picks? So, and I think it's important to pick a niche. And it's not about, as I said, I'm biased on mountain biking. But if you know a niche which has an opportunity to be digitally transformed, the ROIs are probably through the roof. It's not like a simple calculation. You have to think about it, how you do that, how you monetize it. If you think of it of F1, 15 years ago, before Liberty Media, it was just the petrol heads. Nobody was really talking about F1. Now we're talking about short format sprints, different things to capture younger audiences. Petrol heads hate this sport, but the young generations are basically driving this change. So I think in all sports you can find a niche where there's an opportunity which sits under the radar. You just need to talk with ex-professional athletes who know a bit about the sport, and yeah, this is how great investment opportunities are brought to the table.
Just a quick show of hands. Is anyone working on cycling deals or have exposure to cycling?
Besides the clothing.
Yeah, okay. That's unlinked, yeah. Ruari, how about you? What's the number one sport you think?
I think I would invest in the commercialization of college football. What that looks like, it might be in the media rights around college football, the commercialization of the players, or even the infrastructure play around increasing the size of the stadiums and the accommodation that they're starting to provide around the college football teams. It's quite mind-boggling when you go over there and you see 18 to 21-year-olds being cheered on by hundreds of thousands, 200,000 people, because there's about 100,000 people outside the stadium that can't get in, that are going bonkers as well. And the fact that they've kind of taken the chains off this opportunity and it's increased the $5 billion market in the space of a very short time, it's just the beginning. The NIL opportunities over there are extraordinary, more money being pumped into some of these young players that are going to make their way into the NFL. But in terms of viewership, in terms of cult following, buying in, merchandising. You know, there are very few things in the world where local town shops and everyone just drops everything, closes their doors and goes to the game. So I think to get a slice of that action in some way, shape or form, be through media or ownership or media rights in the college football space, I think that's about to explode even more over the next 10 to 15 years.
What does the audience think? Anyone involved with college football? Interesting. Samir, how about you?
I'll be biased, like Laszlo. Having played handball and now developing it in the US, I think I often call handball a sort of modern day gladiator sport. You don't do what the rugby boys do on the pitch, but you definitely push and shove. And in terms of the speed and the pace and the entertainment, it's all there. It's interesting, it's not big in the US, which is where we see the opportunity, and we're taking it there to launch the leagues over there after the Olympics, because every American I've spoken to, when they went to see it, they were absolutely amazed, and they said, you know, just the sport that's played is put in front of 30, 40, 50,000 people in Europe, where there's so much passion, there's so much energy, and there's so much speed and pace. It's just kind of, they weren't aware of the sport that exists here. And, you know, we're lucky to have attracted the world's biggest handball players of all time, the GOATs of Mikkel Hansen of Denmark and Karabatic of France. And between these two guys, I think they won something like a dozen or so Olympic gold medals and another dozen or so world championships. And being able to take the Champions League winners and finalists to the US, and later on this month having the Team USA, that both in men's and women's is doing particularly well for the first time, working closely with the national team players and now hosting them in Europe against other European teams, is just giving me a great sort of reason to believe that the sport that I grew up sort of playing in the city that was the European champion, or had a club there, the European champion, I always felt over the years that it's massively invested and undervalued, to the point of sports outside of football and you know, the baller league, the pickleball, the paddle, all the new sports that have emerged in the last few years, and having the likes of the athletes investing is going to be my prediction in the next 5-10 years. I mean, interestingly, we had conversation about also creation of the World Handball League, which we are not sure about because it's very much down the line of the Super League of football, and I think it would probably upset lots of people in that sort of capacity of taking a huge amount of big clubs like Barcelona. You go to Barca, offer them anything alongside those lines, their eyes sort of just brighten up because there's big bucks being thrown at that. But I'd like to develop it in the right way. I'd like to develop the grassroots in the US. I don't want to upset the European Handball Federation either by taking, you know, 50% of the handball league players from Europe to the US just because it's going to be lots of money. So we've got to do it right, and we've got to engage into the college sports ecosystem. To Ruari's point, when I spoke to CEO of NFL, CEO of NFL Europe, he said that $35 billion are actually netted every year by NFL in terms of broadcasting rights. The next one is the college sports in the US. Everyone would think it's the NBA, MLS and NHL, but it's actually not, it's actually college sports. So finding that sort of relationship between the new sports emerging in the US will massively benefit the global handball movement, and I'm so very bullish about that.
Is anyone from the audience involved in handball? How about you, Jess?
I'm going to slightly cheat and give two answers, both of which are slightly more macro. The first one, as you can probably guess, is going to be women's sports. But for the reasons, as I said before, in terms of the underinvestment, as well as the massive potential addressable market, if you think about it, a lot of the current women's sports viewership base is men's sports. So you've got all that to tap. But then also, there's this entirely different sporting proposition that's more focused on the cultural and entertainment side of people going to sports matches or watching sports, but it not being the sole focus. There isn't that tribalistic nature. It's not, I'm going to go and sit and watch this match and not talk to anybody and just scream when they do or don't score. It's much more about a social event. And so you'll see some of the new stadiums that are being built in the US, for example, like Denver, they're having stands that are 3 seated stands and then a standing area where people can chat and watch the game and do a lot else. And alongside that means that you draw in a lot of different social groups, you draw in a lot more families, which is being seen already in women's sports. And who don't want to go to men's games because of the tribalistic and aggressive nature. And so you've just got this huge population of fans to tap, and it's really exciting. And alongside that, the spending trends of that fan base and the engagement of that fan base, as I mentioned before, is far higher. I think the LPGA were the first ones to really start putting out data on the ROI of women's sports fans, and it was for every dollar invested, they got a return of 7, and that's just the first one. And so it's massive because fans are noticing sponsors of the women's sports and recognising that they're doing the right thing and they want to be associated with brands who are doing that, as opposed to there was an interview with Skoda that I saw the other week. They wouldn't want to be associated with a men's brand because if you are a sponsor of a men's football club, then fans of any other men's football club aren't going to buy your car. And so you've actually got quite a big different proposition there that's quite exciting. And then the second one I will briefly say is mass participation sports. It's not your traditional professional sport commercial model, but actually it's really quite interesting. Again, you've got a huge addressable market. There's a lot of associated revenue streams as well as the core sport. If you think about the Great North Run, if you think about paddle, whatever you want to say, and there's quite a lot of potential there to really grow, and it's so accessible. Right from, if you think about paddle, it's everything from kids to elderly people can play, and there are just so many associated monetization opportunities that come with that.
So we talked a lot about opportunities, but let's finish by saying some of the risks and what's gone wrong in some of the deals which you've worked on. Attila, do you want to go first?
Sure. Lastly, also showed the positive things, but true to be said, usually investors come to us after they burn themselves. For us, it's an easy sale, but jokes aside, usually what happens is when we look at the sports asset, we tend to look at the really traditional revenue streams of it, and let's say KPMG is a financial audit, there's Gunnar Cook, there's a legal audit, everything looks good, right? But what happens in the background, these clubs use software. And we don't have to think about really fancy things, starting from Microsoft licenses. We had a case where the whole back office of the club was using so old Microsoft licenses. Basically, when they bought the club, they not only had to upgrade the licenses, but buy new hardware, new laptops, because they couldn't basically upgrade to the latest Windows things, which on paper looked like a small thing, but it was like a 70,000 investment in the club level, which again goes out from ROI, right? And these small things add on, and the bigger the investment opportunity, the larger the risks. And if you invest in, even if you're a minority stakeholder in, let's say, a mid-level football club, let's say football, and there's a data breach, fan bases, tickets, personal data, the potential damage, we're talking about millions of pounds. And this today should not be something like, okay, there's a part of digital aspect, because like I said, it should be one of the core things they look at, because in reality, you can lose way more money in 2 years, 3 years if you neglect this. And as I said, unfortunately, most investors first use and then learn. But that's why we are here to talk about this topic, to think about digital as a core element of the sports asset, and just make sure you save your money and keep your ROI in the right direction. Because, as Samir said, it's difficult to get positive ROIs in sports. Like, don't shoot an own goal, right? So at least look at the digital aspects of the business.
The key risks, right? Key risks.
Yeah, I think just generally, what are the risks? What have you seen that's gone wrong?
What I've seen, yeah, I guess one of the biggest risks, thinking about football, is not understanding the impact of relegation, right? Or the owners of the club, if they bring in a minority stake, not explaining or making it aware to a minority investor that there will be capital calls when we do get relegated, and that we are expecting you to be our partner here, our financial partner, to steady the boat, to make sure we're pumping more money back into the club. Otherwise, there are provisions in the contracts that you sign when you invest into the club saying that if you don't follow on with your capital calls, you will lose a percentage of your position in the club, right? So there's an education around it beforehand. You know, these are risky assets. It's not for everyone to invest into. They are highly volatile if it's in a market that, well, in a league that has promotion relegation. So you need to understand what that can look like. You need to understand the governance of the league as well, and thinking about, let's take the IPL for example. There's a guarantee that the clubs will get 80% of the media revenue. Well, what can they do to change that to 50%? How does that impact the revenue? What are all the possible scenarios that can happen by the top co in changing the rights and responsibilities of the teams? So I think a lot of the time it does come back to the traditional due diligence, but also an understanding of the worst case scenario when you look at relegation and what that can look like from a capital perspective. As a firm, are you in the position to then double down on your investment? Or you could end up having a terrible ending to that investment just because you haven't really understood what you're getting yourself into. So that's probably the most common thing that I've seen when things don't necessarily go the right way. And that's coming from a Sunderland fan, so I've experienced that a lot on a personal basis.
Yeah, so investing in sporting properties could be a bit of a black hole experience as well, because to Ruari's point, relegation is looming on the majority of the clubs, but that's sort of top 5. But then the next 5 are supposed to play the European football, and they don't always, and they kind of sit somewhere in the middle of the table, and that has a direct impact on their viability. I think most sporting properties, whether it's football or others, are struggling financially. Hardly any are actually breaking even. They constantly need a sort of injection of capital. As I said early on, they used to be local business owner. They had multiple businesses, so it didn't really matter to them. It was a trophy asset. Now it's kind of changed. To Laszlo's point, what one has to be really pedantic about is the digital due diligence, or due diligence across the board, because there are many skeletons. I remember when I intended to acquire a controlling stake of the club I was chairman of, so I appointed PwC to give me a 10-year audit before we made a decision whether we were going to invest or not. And that same day, we had a hacker's attack, and the financial data of the previous 10 years just disappeared. So we demoted literally to the paper trail of the sort of last 10 years, which was a strong message that that structure at the time was milking the cow that was on their knees, and there was no real scope to make something out of it. So you've got to spend the money. If you're investing in social impact-driven assets like sport is, you can't cut corners. You've got to get your due diligence right. And you also got to realize that, and I've seen that and experienced that with some of those around me, that the fans turn against you because of the way you're treating the club. You know, forget about any return on your investment. You find yourself in Dubai or previously Moscow hiding, because you will not be welcome back to the stadium where you used to be chairman of the club owner of. So you've got to ensure that this is not your traditional investment. This will win you favors if you play it right, because business gets done at the stadiums, like it gets done at golf courses, and it gets done at the Formula One tracks and races. But you've got to have the right intention. I think to Ruari's point of the new sports and new leagues, that's a very, very different mindset. You can really come in and out. We've got to realize that sport is not your liquid asset. You're not going to be able to exit whenever you decide to do so. You're not going to be able to force exit. You're going to have to be prepared to keep on funding together with the other co-investors in order to get it right. But is it fun? Is it sexy? Is it attractive? It is all of this. I know people that have invested in fashion and other sort of creative disciplines, because you get to go to London Fashion Week and Paris and Milan, you travel around the world, you go to New York and you're behind some of the new fashion tech. It's got benefits for you. If it's a purely transactional thing, then you've got to do your due diligence.
I think I'd just add to that some of the more macro risks, and these are some of the bigger ones to some extent, because they're the ones that you really can't control at the individual club level or league level. So thinking about media rights, so if we think about France and Ligue 1, what's happening there, rise in piracy alongside the change in distribution formats and viewership habits, and that means that the valuation of media rights are going down. At the club level, how do you protect against that when you have limited, if any, control? I mean, there's only so much control you can have about that at the league level itself. And then other things alongside that being, if we think about women's sports, how do you protect against the broader growth of the asset class, or the entire industry not growing at the speed at which you predicted? Maybe we'll get there eventually, but what if it doesn't get there in 5 years? What if it gets there in 10 years? And so how do you protect against that? There's only so many ways. There's sort of the downside protection of, we don't use debt in our structures. We have aligned structures with the remainder of management and the previous owners, so you're at least making decisions in the right way. We have diversification across the portfolio. So, for example, in our multi-club vehicle, you've got a club from each country rather than being concentrated. And then we're picking the assets that we think are going to outperform or at least drive the growth of that market. But in essence, this is investment. There's always going to be risks associated, and it's how you can best protect against them, and it's that risk-return balance.
Thanks, guys. Any questions from the audience before we wrap up?
Thank you, guys, for the insights and for your experiences. My name is Christopher. I have a kind of three-layered question. The first layer is about media and film industry specifically, because it ties into the sports a lot. The question is more of, how can you tie in broadcasting rights, media rights, the streamings, the YouTubes, the Twitch platforms, the creator economy, to those old legacy assets as sports clubs typically are? And kind of following the Wrexham model or even some others, and like EA Sports just sold their business as well. So it kind of, the media landscape ties into it. So that's what I'm pondering upon. And the second layer comes from, if those legacy assets are being owned by large family of businesses, maybe it's more towards you, Samir, is how can you ensure the succession planning, all of those, like to give it to the next generation instead of selling it to a private equity firm or other investors? And the third aspect is kind of important, is how do you can actually make those businesses resilient, so you don't have those data breaches coming in as well.
So just to answer your first question, how would you turn the legacy or traditional asset into the modern 21st century or 2025 asset? Is that's where the digital transformation comes in. I think we've seen with what the streaming has done in relation to the opportunity to engage with the audience outside of your traditional media rights that is controlled in different parts of the world. We've seen how the layering of the broadcasting has introduced the new sponsorship models that you can, whilst broadcasting, also be selling your LED space on the screen to other sponsors. And obviously geo-blocking in terms of which you engage with different global sort of geographies is enabling you to do all of that. We've also seen a huge influx of Apple, Netflix, and everyone else really interested from the broadcasters to invest in sports and produce programs that promote sports, from Formula One to Wrexham to basketball and many, many other sports. So clearly there's an appetite, clearly there's an entertainment value there, and clearly there is a sort of, I would say, a demand from the consumerism point of view that a new way of consuming content, where when you go to football stadiums now, whether it's us or the next generation, they're not glued to that pitch, whatever that pitch is. They are really consuming the stats, they're consuming the information, they are consuming and spending money on their screens as well as inside the sort of stadium environment. And all these touch points are very, very important. And that's what gives the smart clubs, you know, you're familiar with the notion of the smart stadiums. The way in which the different touch points and the digital transformation when it happens in real really makes a huge difference when it comes down to everything, including revenues. On the succession, I don't particularly think that owning a football club should be a succession thing. I actually don't think that owning an art collection should be a succession thing. I don't particularly think that my art collection of a few hundred pieces should necessarily be the art collection of my children, because art is a sort of bit of a state of mind, and what I like, the next generation may not. They might inherit it and keep it because of the the value, the asset value of it, and maybe should dispose of it, but they should build their own thing. So owning a football club, in my view, is a one generation thing, because I doubt that you will still have it in 20 years' time. So I wouldn't advise that that becomes part of that sort of generational wealth and passing it down.
Any more questions? Do you want to add something to that, Ruari?
I would just say on the storytelling point, it's really important to stress that storytelling is extremely important, and good storytelling comes from the authenticity of the local area and the culture, and really driving that home. But it's important to understand that whilst you need that and you need other revenue streams, the success and the valuation of the team comes from the performance of the team, right? So even though Wrexham have an amazing documentary series about the story, you know, Ryan Reynolds is in there countless hours working behind the scenes as hard as he possibly can to make sure the performance on the field is as good as it can be. It just happens that the storytelling comes in with the right culture and the right understanding of the area, and it creates a nice convergence between what he's doing and what he's doing for the club. You have to have the fundamentals nailed down first, and that's ultimately what has driven the increase in valuation of the club. Yes, in synergy with the increase of exposure for the club, you get bigger sponsorship opportunities, and he's probably one of the best marketer and advertiser in the world. No one can really replicate what he's done, and no one should ever try, because it's not going to happen. It's a timing piece, and he's a unique anomaly as an individual. So I think it's very important that you have the storytelling, and speak to the Fullwell guys that did Something Till I Die, one of my favourite shows around Sunderland, and it's very important about them increasing the exposure for the club. But ultimately, when the new ownership group came in, it were the changes that they made at the academy, the changes that they made in bringing younger local lads from the area to play for the team, that really brought the synergy of the team together to get them the promotions, right? It increased the global exposure for the brand, which is excellent, maybe get some extra dollars, but the true revenue, the majority of the revenue comes from the performance on the pitch. So you need to make sure that's taken care of.
Hi. I got really on the panel know me, and you know I have quite controversial views, so bear with me. First of all, thank you for having me.
My conversation is around the value of the supporter. I've been a season ticket holder at Liverpool for 25, 30 years. If I look back at the amount of money that my family have invested in the club with season tickets, programmes, food, drink, etc. And now it is great that investment money comes in, but actually the gap is growing between and I'm a huge cyclist. I cycle Cancun to Panama. I know lots about other different sports. I worked in boxing. I've got quite a rounded background. What I'm really concerned about as an individual who loves sports is the chasm that's being created of wealth. I don't mind that big wealth companies come in and spend their money in the Man Cities, the Liverpools. Thank you, we are brilliant. But what I'm concerned about is that they're not feeding it onto the level clubs. How should that happen? What I'm also concerned about is the comment around women's teams aren't the Paulette sister anymore. I was at a legal conference last week around sports. Samir, you know who I was with. It really pains me because women's sports is fantastic. We are a sport in our own self. We're not the Paulette sister. But what I'm also hugely concerned about is this gap. So why is a human who has invested 25 years of their life in a team, in a sport, not being given access to investment opportunities? Listen, the tokens don't work. That's not an investment opportunity. That's a cash generator. Why not create something like a C-Legals or a fund that can, an angel fund, whatever, so that the season ticket holders, the alcohol buyers, the food buyers, the programme buyers, the share buyers, why do they not get a piece of the team when they are buying for their team? And that goes across all sports. All sports.
Yeah, Samir, I think you've got some interesting ideas in that.
I mean, to some extent, I agree with you. I think once you get to that level of valuation and wealth, it's not on the minds of the owners of the clubs. And we were actually having this conversation the other day with the owner of a large male club, and how we can do this differently on the women's side. Whether it's ownership itself or whether it's something akin to that, but bringing the fans into the conversation. It goes back to the first question on this panel in terms of the fans, the community are the club. And when you lose them, what do you really have? That the players are from the area, well, there's a certain number that are, but it's declining. And actually, how do we bring them into the conversation, into the decision making throughout this process? And so it's and I think the director of football the other day was saying a membership is just a glorified ticket, that it's just a seat reservation. How do we make it about more than that? So allow them to vote on, or give them some voting rights. Maybe it's not ownership because of the complex structures there, but allow them to vote on some of the key issues with the clubs. Create different fan experiences, work with fan supporter groups, and some clubs do this, some do it less well, some do it better, and actually if you look at how League One clubs operate, actually you could probably learn quite a few lessons from them on how they relate with the fans. On the women's side, we can still have at the end of a lot of matches signing autographs. Clearly you can't really do that in the men's sport.
Sorry, I'm just going to say, we don't want experiences. We want the return on investment that the big investors are coming with. We are spending our money paying for the season tickets.
Tough.
Yeah.
I know it's tough. But how is there a possibility of creating that structure?
But also Jess's point, I don't agree that one should give fans the voting rights around the management of the club, because ultimately you made an investment. You know, imagine giving your employees to run your management board. Just because there are thousands of employees, you're not going to get the consensus of the decisions that actually touch them and their sort of potential of getting raises and stuff like that. But I think there've been attempts, but I just felt it was all very fake, and it was just trying to please the fans. it's all changed. I think you've got to understand, I've been going to football matches since the age of 2. It used to be 3 generations, now it's not, it's 2. But I have to understand that my football club is no longer owned by the local guy. It's owned by the international investment group that is building the new stadiums. It's also realizing that when you have a global brand like Liverpool, how big is the stadium and how many Liverpool fans are there out there that are not actually being looked after? So if you prioritize your season ticket holders of 20, 25 years and start giving them some return on investment and bringing them into the option shares or whatever schemes, it doesn't work. You're the fan and you are consuming because you are enjoying the entertainment element of your game, however much. And if you can't afford it, there's going to be somebody else who's going to be able to afford it, just like a piece of art.
And that's the problem. It's like so therefore you're losing the fans and you're turning it into a corporate model.
But that's because it's necessary in order to bring the world of sport, whether it's football in Liverpool or something else, to the global audience, and to satisfy what about the Liverpool fans in Indonesia, in China, in Latin America? They also need to be taken care of because they're buying the merchandise, they're buying all sorts of things, they're watching the Premier League, they're contributing in a different way. They may never set the foot in the stadium. You've got to also deem them, not just the local crowd that fills the stadium of 70,000. I'm dealing with Chelsea and UFC and Man City, 500 plus million fans around the world. How big is their stadium to entertain them? And what are they doing? Barcelona doesn't know more than a couple of million fans, and they've got 200 million on their database. What are they doing with 99% of them? There's a disconnect. There's the locals are not happy because the prices are going up, which I totally understand.
That's not my question. That's not, Samir, I think you misunderstood my question. My question was, we're talking about unlocking investment opportunities in the business of sport. And I feel like that the conversation has been around hedge funds, high net worths, everybody else, apart from the fans of the sport. How do we unlock investment opportunities to gain returns from the sport that the fans don't?
You can't. Liverpool is worth 3 billion or thereabouts.
I'm not talking about Liverpool, I'm talking about sport in general.
But then you've got to invest in hard currency.
And invest in.
That's kind of like crowdfunding from.
This is what I'm saying. How can we almost create a crowdfunding platform?
It's been tried with Watford and Wimbledon to a sort of success rate. It just doesn't work having thousands and tens of thousands of fans as a small shareholders and not being able to actually make any decisions to impact anything. I mean, you are sitting on a paper, on a digital equivalent.
But you're talking about an NFT. I'm talking about
I'm talking about the fractional ownership.
No, but
I don't mean NFTs. You can tokenize funds so that individuals can participate. But the issue is regulation.
And that is exactly my question to the panel: is how do we bring this back to the fans? German football clubs run on fans. They may not have the budgets to spend, but the fans are the owners.
Yeah.
How do we
Republic do this for clubs in the UK. They're sometimes doing it through tokenization.
And again, I don't want this to just be football focused. There's so many.
Yeah, it comes down to the ownership group of the sports asset deciding what's best for the growth and the trajectory of the club. And if they decide that involving the fans in some share of ownership makes sense for that, then they have actually done that on platforms like Republic. But it's ultimately up to decision makers.
So Republic is like an investment.
Republic's like Crown Q, used to be Seeders, but renamed Republic. So there are people doing this for certain clubs. Yeah.
That's the answer I wanted. Thank you.
We can do that
Thank you.
Well, thanks guys. I think.
Sorry. Yeah, Sasha can do it. Yeah.
We can do it, Sasha.
Yes.
I think we've only got till 9. Okay, there's a quick. All right.
Hi, sorry. We've talked a lot about engagement metrics, and I think Laszlo had a slide around exploiting current demographics. I just wondered if there's any plans or any thinking around exploring new demographics. So the thinking that comes to mind, sorry to show how sad I am, but Dallas cowboy cheerleaders and kind of exploiting that market and kind of peripheral revenue streams. Is there any thinking around that? Particularly for football clubs, because for male sports is very male audience. And with the Dallas Cowboy cheerleaders, they brought in kind of massive female viewers from that, and just if there's anything happening in that space.
I mean, I'll quickly on the women's side, and I think there's a benefit that men's side can be had from this. We are tapping into an entirely new audience. Yes, we have some of the men's fans, but like I was talking about the family-friendly element, you're bringing in new families. The Rugby World Cup, 50% of people that went to those matches had never been to a rugby match before. And so you're constantly bringing in new fans who are experiencing the sport in different ways, understanding those demographics, and there's a lot of work being done now, think about looking at analysing the ticket data of the Euros, and thinking for these people who've experienced this match once, and we often see this at the international level, and driving that into week-on-week fandom is a big focus, especially on the women's side, but we might get to a point that, if you think about Arsenal, that's an entirely different fan base that go to matches than the women's versus the men's. Because stadiums are sell out right now on the men's side, it's not been a priority, but at some point, say they expand the stadium, which I think is what I headlined about earlier, maybe they'll want to invite in a slightly different fan type, and at that point, they'll start maybe working with the women's to really understand that fan base itself. So it's being done, I think, across all levels, women's and men's right now, to really expand that fan base, and especially because on the men's side, it's growing more slowly. The women's is growing really fast. The men's needs to think about these different revenue opportunities on an ongoing basis.
I think this is an investment question, because what Laszlo showed is tied into the club's interest specifically. But usually what happens, investors are not open-minded enough to look on a broader scale, because to measure those what we call digital intent is basically you need to invest money to find out which audiences could be a potential growth opportunity. And let's say in cancer treatment, it's obvious we need to invest, right? We want to solve this problem. In enlarging opportunities with digital intent, it's not obvious, we have to talk about it. And it depends also country, region, geography level, what kind of data opportunities there are. For example, let's take China. China is a black box. Even if we like to explore different demographics, it's not possible. So it depends on the situation. What the opportunity is there, what we see that the mindset is not there to look at those data points, because the question is why we would look at those points now. I think time will come where this will be a daily conversation, but right now we have just only a handful of conversation about how we can expand into new audiences. I think a good example is F1. They are investing in this and they are exploring new opportunities, how to get to the younger generations, how to make it interesting. But as we know, F1 is a big business. So in other cases, I don't see yet the trend, but technically speaking, the opportunity is there.
Do you want to do a quick one? No. All right, guys. Yeah, let's wrap up. Well, I think we really love working on these sports deals. Huge opportunities, as you've seen. Really interesting insights from the panel as well. The next stage of Mara's journey is really opening up the deals which we work on in the form of like a marketplace. So if any of you are interested in that, to participate in some deals which we work on with clients like who are on the panel, just let us know, subject to qualification, of course. But without further ado, please thank the panel.